Today we're going to be talking briefly about the difference between stop hunts and trends. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. The last few weeks, obviously, we've talked a lot about market maker template, 12 candle session, the 3-hour window between London and the New York Open. We've talked about the stop hunts at the opens of markets. We've talked about the different types of stop hunts and candle count confirmations. Today we're going to just talk briefly about the difference between stop hunts and trends. We're going to also go into some examples later in the next few videos, just specifically. Again, I encourage you to print off your charts. If you haven't gotten the free eye sessions indicator or the template for the sweet spots, the number levels, we'll include those in today's video as well for you to add those to your charts. It's really important to be printing off your charts every single session or every single day, even if you're, regardless of the time frame that you're trading on. But again, unless I say otherwise, I'm trading on 15-minute charts in terms of my big picture for the intraday session. But today we're just going to talk briefly about the comparison and the difference between a stop hunt versus a trend. Now, we've talked about the Asia box. We've talked about the close of the markets. I'm going to go into a little bit more detail in the next few videos as well, following the closes of the markets, looking at your overall Monday to Friday cycle, the close of the markets and how the market closes and goes into the close of New York into the rollover into Asia. That can give you a lot of information heading into the new day about what to expect. And it's all about creating if this, then that scenarios. So each day I sit down, I put down my levels on the market, so I have my numbers marked off. Once the Asia box is, 2/3 of the way through, I've got a couple of scenarios based on the template that we're in. If we're in a down template, are we in level 1, level 2, level 3? What is the news calendar looking like for this week? I'm particularly concerned always at the end of the week, first working backwards. I want to see if there's any structure in place that is leading us to an opportunity to be selling high towards the end of the week or buying low towards the end of the week. And also just understanding the opportunities that can present either participating in a stop hunt or in a trend. Now, with all of your approach to the market, obviously having a big picture, look at your trend lines, your weekly highs and lows, daily highs and lows, and then your intersession highs and lows. And as I've said before, the best trades occur at the highs and lows of those time frames, and including end of day at the highs and lows of months. And if you think of it in simple terms, if you're targeting the average daily range or the average weekly range or a part of that, or if you're trading end of day, if you're targeting a weekly range or a monthly range, there are significant opportunities that present at the highs and lows of those time frames. And if you get really good at mastering those opportunities, you can understand why it's important, especially if you're trading intraday, to step back. There are so many good trades that instead of trying to trade the same market every single day, no matter what it throws at you, looking for some basic playbook setups. We talk about building your playbook in the 7-step daily routine for high performance traders. If you haven't done so, go to my homepage. It's an audio file. Download it. It's about creating a daily routine that's going to develop your skill set, build your mindset, to build confidence and discipline to master the markets. And we're going to go into a bit more depth again, coming back to that, because the last couple of months we've spent a lot more time on the technical aspects of the market, but what a lot of traders are still emailing me about is they've missed the message. It's the bridging of the two, because it's great to have the technical knowledge, but as we saw in some of the trades on Friday, there are so many hidden little tactics that the smart money has in terms of the speed of the candles, widening the spread, volatility around turning points to confuse and throw a wrench into the retail trader's mindset. That's why it's critical when you go into the market each day, you've got your plan, your game plan written out. You've defined your approach to the market. If this, then that scenario. You may have a couple of scenarios in play there based on what they throw at you. But if you don't have something to refer back to in live time, often you'll get scatterbrained and start chasing stuff, which is exactly what they want you to do. And you'll find often that by the time you've chased something, the next thing you know, it's going against you aggressively in the other way. So let's talk about stop hunts. Stop hunts tend to be very fast and aggressive. We talked about them coming out of the box and usually moving in 3 really strong movements. Sometimes that'll occur in 1, 2, 3 candles to take out a daily or an intraday high or low, or an intersession high and low. But you may also see that in 3 impulses where you get 1, 2, 3, ending on a significant price level, double zeros, maybe 50, after it's taken out a swing high or swing low, or again at a daily high or a daily low or a daily high. Sometimes it may be trending within the box. We've talked about 3 push patterns inside of the Asia range, and it may turn and come into the Europe Open and vector out of the box in 25 to 50 pip movements in 3 strong candles. What's really notable about a stop hunt is that they tend to go vertical fairly quickly. Now with trends, often what we'll find with trends is that they're slow and grinding. Now if we have a stop hunt occur, we can also see those stop hunts consolidate for 30 to 60 to 90 minutes in some cases. But in a V top or a V bottom, as we saw on Friday in the pound and the pound yen, they will often sometimes reverse into 2 or 3 candles with some sort of form of a railroad track turning point. But also, when we have a 50, 75 pip stop hunt that occurs, which we've seen over the last few weeks in a couple of the pairs, that's when we'll look for the market to go sideways and produce an M or a W formation. Now, we'll go through some specific examples in some of the next few videos, but if you want examples, print off, go back through any of the pairs, you're going to find these. I predominantly follow the pound pairs, but we saw some great trades on the euro pairs last week with some of the news that came out on Friday. They ranges were anywhere from 75 to a couple hundred pips on the euro yen. So usually 3 strong movements. Again, it doesn't have to be 3 strong candles. It can be combinations of a couple of candles, pause, a couple of more candles, pause, a couple of more candles, pause. And if you're using 15-minute charts, you can see how that can be a 60 to 90-minute process. If it's really 3 really strong candles, you're looking at 45 minutes. Now that's really important to remember because retail traders are renowned for trying to counter trend strong moves. We think we've missed the trade and all of a sudden we're looking for it to reverse on smaller time frames. My advice to you is do not counter trend. Do not counter trend the overall trend and do not counter trend the stop hunt. That can become a very dangerous process that can cost you a lot of money. Wait for the stop hunt to end, which we'll often see end on a pin bar, a hammer, or a consolidation, a railroad track, consolidation of 60 to 90 minutes. So the question then arises is, well, how do you know if that's a reversal point or if you're in a trend? Well, again, your overall market structure will give you that information. We've talked about identifying the overall trend in that Monday to Friday cycle. Are you in a level 1, a level 2, a level 3? And if you're in a level 1, coming out of a level 3, do not counter trend those. They can tend to go into, a 2 or maybe 3 day move, which can put traders into major losses if they hold on to a losing position, if they don't use a stop loss, or if they move their stop. So again, this is about making trading simpler and less stressful for you, but also tipping the odds in your direction to have an asymmetrical risk-reward opportunity. The stop hunts usually occur around the beginnings of sessions. So often you'll see London will come strongly out of the Asia box or stay consolidated for, maybe 45 to 90 minutes and all of a sudden explode out of the box and move anywhere from 25 to 50 to maybe 75 pips in some cases. But it's important again to have your overall structure there, and also to look for areas in previous sessions, either at previous day highs and lows, or where profitable trades have occurred from the previous sessions that have not yet been stopped out, that are within that boundary of where that market's coming out of the box. This occurs also in New York. I had a great question regarding, does this same thing occur in New York? Absolutely it does. Now what you'll find with the New York session is that it will either continue the original direction of the London stop out and breakout, or it will reverse, and there's a trade called the London reversal, which often you will have already saw that consolidation occurring towards the opening time of the New York Open, which again usually has culminated in some kind of V top or V bottom, or an M&W type pattern setup. Now again, this is where your other technical knowledge needs to come into play in terms of your templates with a rising trend line or a falling trend line if you're in a down market. And again, just looking for the simple, obvious setups. That's a great point, really. Again, when you really get this down, you realize there are so many great trades. You don't have to be going overboard looking to try and trade every session or try and trade every move of the market. I'm looking for pairs that set up really simply and give me the best opportunities to identify great setups, either maybe at numbers or at highs and lows where there's already been pin bars, or where there's been a turning point, or we have a peak formation candle in place where the market has traded from a previous session, a swing low, a swing high. And again, just looking to keep it so simple. And then usually with the way that I trade, if I'm on the 15 minutes for the entry, the maximum stop loss I'm going to have is 15 pips on that market. So usually around level 3, you'll see the stop hunts go vertical. And what I mean by that is that they will literally go straight up, sometimes in one big candle, which is usually 3 impulses on a smaller time frame. But they will tend to go vertical. We see that a lot on the Fed days, and sometimes on interest rate announcement days or other pending major news releases, Trump election, the Brexit vote, those sorts of characteristic major events can tend to cause a 1 or 2 candle spike that tends to end on a capitulation, whether up or down, and then the market will roll over and tend to stop hunt both the upper and lower highs and lows of the day and roll over into the next trading period, either below in the lower range of that market or the upper range. But again, they're easily identified by the vertical nature of the stop hunts. And often stop hunts will consolidate and reverse. They can reverse and stop on it aggressively in the other direction, but usually the fastest time frame that will occur is in a 2 candle reversal. But most of the time you're looking probably from 30 to 90 minutes as a normal time frame. And the market, again, this is where your overall structure comes into place, because you can often see a vertical stop hunt and then just as fast the market come back down the other way and do a measured move of the same distance that it went up. And again, that's more likely to be seen in a trending market. So trends, on the other hand, tend to be slow and grinding. So often what you'll see is trends, they'll be trending within this, and you'll see stop hunts occur within these trends. But stop hunts, once a stop hunt has occurred, if the market goes into a trend, it will tend to be slow and grinding. And what I mean by that is that you'll see the market, if it's in a downward movement, it might drop 12 pips and move up 10. Drop 12 more, move up 10. Drop 12 more, move up 10. So it's constantly moving in that direction, but it will often not give you really obvious opportunities to enter the market. Once the smart money is all in, and they've committed their positions and all their capital, the market will just tend to grind methodically in the direction for 6 to 8 hours. So often with Asia, you can sometimes identify a 3-push pattern that's been a grinding, slow trend movement, either to the top of the range or the bottom of the range, at which point they will come out with an aggressive stop hunt to where that move began, based on the overall structure. They tend to be flowing and ongoing. 6 to 8 hours or longer if you're on longer time frames. Again, if you're on a monthly chart using end of day, you'll find that there's always a Monday, Tuesday type pull, or a Monday, Tuesday, Wednesday, then a strong movement again. And then we talked about that. There's always one day a week, usually in most of the major pairs, that tends to move quite strongly as a trending day, and then the market will consolidate again in towards the end of the week. We talked about the Friday reversal. There's a lot of different ways to look at the longer time frames, but in terms of using the 15-minute charts, the stop hunts tend to be very consistent, usually at the market opens. They're fast and aggressive. It usually occurs in at least 3 strong impulses. It can be anywhere in the range from 25 to 50 pips, sometimes more, depending on the setup. Whereas the trends, once that stop hunt occurs, we can sometimes see it reverse just as aggressively, or we will see the market consolidate for 30 to 90 minutes roughly, and that sometimes will often coincide with the beginning of the New York session. We'll see another stop hunt occur, and then the market grind and trend for the duration of that session into the London close or into the New York close. So hopefully you got some value out of that today, traders. Again, look at the market sessions, the market closes, the opening time frames. Stop hunts, fast and aggressive. They tend to be vertical in nature. They tend to occur in 3 strong movements. Trends will be slow and grinding. They're ongoing, and they can last 6 to 8 hours, or if you're on longer time frames, much longer in terms of the overall template and structure. So stay disciplined, traders, stay focused, print off your charts, mark off your levels. We're going to get into some specific examples this week, looking at the different types of setups, the different types of candle confirmations, and also the different levels and how they will come out of those levels in the trade. So stay disciplined, traders. Have a great trading week. We have the Brexit vote on Saturday. As I said last week, we had some huge ranges last week, some great trading opportunities. Keep it simple. Keep one thing in mind. As we get closer to the end of the week, the ranges expand and the opportunities can increase for some of the pairs, especially if they've got pending news events building up towards the end of the week. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.